bought Corus a few years ago. More recently, Uttam Galva signed up with Arcelor Mittal through a stake sale, and now JSW has entered a strategic partnership with one of Japan's largest steel companies, JFE Steel. To understand the nature and rationale of this partnership and where it's headed, we're joined by Sajjan Jindal, Vice Chairman and Managing Director of JSW Steel. Mr. Jindal, thank you very much for joining us. Let me begin, sir, by asking you to share with us some more details of the rationale behind this strategic alliance. What is it going to bring on the table for JSW?
Yeah, as you know, JFE is one of the large steel producers in the world, and especially of very high quality steel producers supplying to the automotive sector in Japan and world over. As India's production of automobile increases over the coming years, as already you know that automobile is growing 20 to 25% a year. They are very keen to come into India to produce this high quality, high end product, and we have been related or connected with JFE for last many years in improving our performance and benchmarking with them and stuff like that. So we are in this agreement that we have done today is we are expanding our canvas, and we are bringing them on various fronts, but especially the main focus is to produce high quality automotive grade steel for the skin panels, for the outer body parts and stuff like that.
All right, I understand the collaboration is limited to the domestic market. How will it pan out? Because you have aggressive expansion plans in terms of capacity. You want to, I understand, go up to 11 million tons by 2011 and possibly 30 million by 2020. So is JFE going to be a partner in some of these expansion plans? For instance, your plants coming up in Jharkhand and West Bengal. How is the collaboration going to work on ground?
Well, as of now, our major focus is on the technical aspect of the two companies, but also we are looking at having a stock swap where we will hold some part of JFE and they will hold some part of JSW Steel equity. So therefore, all future expansions that whatever will happen, the JFE will be part and parcel of those expansions. There could be a possibility also. When we develop these projects as SPVs in Jharkhand as well as in West Bengal, that they come in as a larger equity contributor in those projects.
So what you're saying is the larger equity contributor specifically in each one of those projects which you're structuring as SPVs. Is that correct?
Yeah, that's correct. It could be larger in the sense, not the majority, but much more than what they would be able to do it in JSW Steel.
All right, Mr. Jindal, let's talk about the equity swap. Can you give us some sense of the timeline, the broader equity swap between the two companies? Are you close to any kind of sort of change now, immediately? What kind of stakes or percentages are you talking about? What is the timeline?
Well, we haven't yet finalized any of those numbers. So we haven't even discussed yet about what kind of numbers they are going to invest into our company and we are going to invest into their company. These are very initial days, early days, and what we have done is that we have set up two teams, strategic teams for respective companies, and they are over the coming days they are going to meet in Japan, in India, and will take various issues forward, including technical as well as equity. But I can't give you any timeline because these things could take a long time. But right now I'm not sure where we will and when will this happen.
Is it safe to say that this will probably occur in the next 6 to 12 months, or is it likely to be a longer time frame, maybe 2 years or 3 years?
No, I think it should happen earlier than that, much earlier than that, because both of us are wanting to bring in the two companies closer together faster.
Oh, so when you say earlier, do you mean earlier than 6 to 12 months or earlier than 2 to 3 years?
No, earlier than 6 to 12 months.
All right. Your promoter holding in JSW, you told me, is around 45%. How will you structure this equity swap? Will there be a promoter stake sale involved as well, or will it just be the company, that's JSW, issuing shares in exchange for JFE Steel's shares? What will the consequent dilution be, and how much of a dilution below 45% promoter stake are you comfortable with?
No, I don't think I'm really concerned about promoter stake into the company. My major interest is to see that JSW Steel becomes one of the best steel company in the world. and to that goal, whatever it's needed will be done. So I'm not going to be the stumbling block in the growth of JSW Steel. But while I say that, I must add that I don't think that would be really needed. We don't have to dilute our stake really to take JSW Steel to the world beater.
No, sure. I wasn't even indicating, sir, that you might be some kind of stumbling block. What I was asking is, what level are you comfortable with? Because, on one hand, you would not want to expose JSW to any kind of hostile takeover. So what I was trying to understand better is above 40% a level that you're comfortable with, or you would be insistent on, or are you willing to go all the way down to 26 or 30%? Because that would help us understand the magnitude of the dilution that is facing us in the next six months, or 3 to 6 months, as you pointed out.
Yeah, no, I understand. No, we have actually, I've not even thought about it, that what kind of level we are going to get down to, or what is going to be the situation. We haven't yet figured out what is my comfort level. I really don't know as of now. But yeah, 40% could be a comfort level. Maybe, I don't know. I don't know.
All right. So when you say, Mr. Jindal, that there is going to be an equity swap between JSW and JFE, what that indicates is that the two corporate entities will be exchanging shares in each other. As in, JSW will issue shares to JFE and vice versa, JFE will issue shares to JSW. The structure does not involve any sort of promoter stake sale, although there will be a consequent dilution in promoter stake. Am I understanding this correctly? I just want to try and understand the nature of the transaction.
Yeah, that's correct. Absolutely.
All right. You did mention, Mr. Jindal, that the primary objective is to strengthen your offering in the automotive steel business. Can you give me your assessment of demand in that industry? Because that industry has been substantially hurt in the last 2 years, at least in the developed markets like Europe and the United States.
Yeah, very interestingly, Menaka, the Chinese market, which is, as you know, is growing very rapidly, is this year going to become world's largest automobile producer at about 10 million units of automobiles. So, and the Japanese are very excited about India because they believe that the next big market is going to be India in the automobile sector. And they are very convinced about it. And this year, I think India would produce close to 2 million automobiles in our country. And they feel that this is the market which we need to enter right now, because we are just about entering, because China produced 2 million about 5 years ago, and in 5 years from 2 to 10 they have reached. So they believe that India may not expand at that pace, but it won't be very much behind China.
All right, Mr. Jindal, one quick last question. I know you're short of time. I'd like to know your outlook on steel prices and demand. Are you seeing a real pickup in demand? Because till now we've heard that most of the upward price movement that took place was because of inventory restocking. So are you seeing a real economy pickup, or demand actually catch up, both globally as well as in India?
So let me answer the globally first. Globally, the markets are not really not very strong and not looking very, very robust. Though the capacities are getting restarted, whether it is in Europe or in US or in Japan, they are restarting the capacities, and that is a big threat, because as you restart the capacities, the markets are going to, the demand is not so strong, so to absorb all the excess capacity which is getting restarted. So therefore, we are going to see the prices to remain under a lot of pressure in the coming days. And coming to Indian situation, I would say the demand is very strong, it's very robust, but the prices are going to remain under pressure because of the threat of imports coming in from China and other countries, because everybody is trying to increase their capacity, and then they are looking at China and India as the major markets. China has its own very large capacity, whereas India is still a net importer. So the threat could be that there will be huge imports coming into India. So I think the steel markets would remain subdued over the coming days.
All right, Mr. Jindal, thanks very much for joining us. I know I'm holding you away from a meal, so I'll let you go. Well, we will wait for more news on that JSW-JFE equity swap. As Mr. Jindal indicated, it could happen very well in the next 3 to 6 months, or maybe even earlier. It's